everybody. This is Rob Keens of goldsilverpros.com. It is Tuesday, August 10th, 2021. We are getting closer to the Muddy Metal Summit. August 19th and 20th will be held in Dallas. If you guys are interested, link below on how to register for that for a free virtual ticket. We also have the first day in person if you want to come, and there is a fee for that because we'll be paying for your dinner. All right. Today's episode, we're going to be looking at gold and the trend between gold and some of the mining indexes to take a look at how the gold mining sector is responding to the movements in the gold price. And I've seen some divergence dating back to 2018 that I didn't see from 2011 to 2018, 2019. And I've seen some divergence based upon the most recent gold price pull down as well. I found that very interesting. And I think there are some things maybe that we can learn from that. And then after we talk about that on the chart, I'm going to introduce you to a company that we have talked about before. We interviewed one of their executives, the CEO, Glenn Jessup. We're going to talk about them on the program for those of you that like to invest in the stocks. Now, I do some of these stock videos because I have a lot of people emailing me every single day. Rob, give me stock recommendations. Rob, tell me about this company. Probably 50% of my email is based upon this, and that's why I'll do those videos. But I think this video will also be beneficial to you guys who are looking at the metal, because we're going to be comparing the metal to the mining stocks and then talking about a mining stock example and doing a full profile of that company. By the way, this company will be joining us at the conference. So let's go ahead and get it started. We're going to hit the chart, and I'm on my favorite stock charting tool, at least for you guys, so I can display it to you guys on these videos because it has great charting tools. That's stockcharts.com. Fully recommend a membership there if you're interested. They have a free service. I pay for the membership just because I get these beautiful, colorful charts, as you can see. So this is my normal gold chart. For those of you that have watched my videos in the past, this is the normal gold chart. You can see the cup and handle pattern dating back to 2011. And then this is the cup. This is the handle. That is a bullish pattern. That handle is still forming, and we think that that is bullish for gold. And you guys have also seen the chart I showed gold compared with back in the late 70s, early 80s, when it formed basically the same pattern. We're in the same area of this gold market we were back then, in which we're about to have more of an explosive upside. I believe it's tracking almost identically. But what I delve a little bit deeper into this, and I wanted to see how the gold stocks were doing. I hadn't looked at that in a while, at least hadn't put it on the program. I've been following it, but I haven't talked about the gold stock indexes in probably 2 to 3 months. Here I've got graphed in blue the HUI and in red the GDX as compared to gold. So gold is in gold. This is the precious metal derivative price, continuous contract. And then the red, again, is the GDX, and the blue is the HUI. One thing that you notice going back, I think we've got this going back 10 years. Let's actually drop it back to 12 years on the chart. Let's refresh it here. You can see that the gold indexes closely track the gold price for the most part. There was some separation here between 2009, 2011. The gold stocks actually led gold leading up to this giant bull market run, because I think people knew that gold was going to do very well. And so the gold stocks did very well. Then the gold stocks started retreating, actually before the gold price did. But it's been, for the most part, it's been almost identical. Let's go back to the 10-year chart. For the last 10 years, the GDX and the HUI have almost identically tracked the gold price movement. So they've gone up and down in proportion to gold, with the exception of late 2018. Remember, we had this big stock market pullback. Late 2018, the fourth quarter was characterized by the Fed tightening their overall quantitative easing program and their overall program towards controlling interest rates. And when they did that, a lot of the stocks pulled back. So gold kind of stayed higher because the expectations were we're going to have a 20% pullback in the market, in the general stock market. So even the gold stocks came back while the gold price stayed above. So what that tells us is, in a situation in which the Fed may tighten and that would cause a stock market pullback, gold itself actually does pretty well because it becomes a crisis asset. Some money flows from stocks to the physical metal. Other than that, though, we resumed our correlation between gold and the stocks until about 2020, and you had the quote unquote pandemic, and the stocks pulled back a little bit more than gold, but they tracked it. They still tracked it up and down, but the gold stocks never recovered. That's the interesting thing. Gold recovered, the actual physical metal recovered as a crisis hedge and through central bank buying from that time frame in early 2020 when we had the shutdowns around the world. So gold did well in that case, but the stocks never recovered. And then we have this big recent price smash in gold down from the low 1800s almost into the 1600s, and the gold stocks followed. So the gold stocks are still mimicking gold, but they never recovered proportionately or as a percentage of the gold price did, starting with early last year when we had the pandemic and the shutdowns. So what does that tell you? The metal, first of all, it tells you the metal is more highly valued in that situation, and as it was back here when you had the stock market pull back. So when there's a stock market correction, the metal does better than the metal stocks. However, the metal stocks are undervalued relative to gold. So they still have more potential upside. Okay. So I'm looking for the HUI and the GDX to recover, and they haven't quite recovered. I think that's because there's a little bit of fear amongst market participants that we may go into, another shutdown mode. And if that's the case, gold will probably temporarily do better. But I think over the long run, we're looking over the next 6 months, year, 2 to 3 years, these gold stocks have a long way to run to catch back up with the gold price. They haven't traced their 10-year pattern. And if anything, during a crisis we see 12 years ago, the gold stocks, longer term crisis, such as the mortgage meltdown, the gold stocks, let's draw this back, about 13 years. The gold stocks, stock indices actually do better than gold. So during an extended crisis, the gold stocks do well because they're a leveraged investment to gold. But right now, look at that. They're undervalued compared to where gold is, proportionately speaking. This chart is proportional price-wise. So you basically can look at it and say the gold stocks never had quite the recovery on the same scale as gold actually did itself. Gold has been leading the stocks, okay? And the stocks pull back when gold does, but they don't recover as much. That tells me there's a lot of upside in the stocks. And right now, even at current gold prices, at about low 1700 range, or anywhere above really 1250 to 1300, most of these gold mines are making money hand over fist. It's all every dollar above about the 1250 to $1300 gold price level in US terms. These gold stocks, it's pure profit for them because that's about the average cost of mine, give or take. Now, each individual mine is different depending on their, all-in sustaining costs or all-in mining costs, depending on how they're representing that, on their presentations and their books. But in general, the gold stocks have tremendous potential. They're printing money, even at a gold price down here. They're printing money, and they haven't recovered to where the metal is. Why is that? Because there hasn't been as much investment resources. That means you have a unique buying opportunity. That means you have a lot of space for these gold stocks to go as gold continues its bull market. And as we get into the next recession, these gold stocks should do better, just like they did during the previous recession. That's what the patterns are indicating. The technical charts are indicating to us. So the gold stocks have more upside right now than does the metal itself. I own both. I own metal, I own stocks. The stocks are so undervalued right now, it is a very unique buying opportunity. And we expect to see the resumption of this pattern where they actually outperform the metal respectively, but we're not quite there yet. But now's where you want to identify opportunities, pick your targets, and then invest in those. If you want to be in the speculative side of the gold market and get into the gold stocks, now's the time to do it. They're cheaper than the metal, relatively speaking. And we think both are going to do very well in the next bull run, which we think is setting up right now. And remember, I have showed you previously, both for gold and silver, where historically in a bull market, gold is tracking exactly what happened in the last big bull market. And it's not over. Just because we had a short-term price smash down doesn't mean the gold bull market's over. We're talking long-term cyclical trend. And we've tracked an 11-year trend here. And then we showed you on a previous video where gold is just at the beginning of a major bull cycle. And when you map it to the last major bull cycle, it's at the very nascent or beginning stages of it. So people that get discouraged when gold falls 60, 70, 80 bucks, those are short-term moves. Those don't affect the long-term charts at all. And so focus on the long-term charts and you can see the patterns. And the patterns are very, very clear. And I provided that information over and over again on the channel. If you're a first-time viewer of this channel, please go back and watch about 70 to 80 of my previous videos where I've talked about longer term price patterns. And if you're a subscriber to my subscription service on the website, the paid subscription, I've gone in excruciating detail talking about previous gold and silver bull markets and provided so much information on why, we're still bullish on them compared with past history when we've had the same situation, same macroeconomic factors, same issues with debt, same issues with pressures on increasing prices and things like that. Gold is a safe haven. It's going to do well. So is silver. And the mining stocks in comparison, specifically with gold, are completely undervalued. They're just have completely separated on this part of the chart and never caught up to the metal. But we see during crisis period, like during the last crisis, they did even better. They pulled back a little bit quicker than gold did, but they did even better. So when you see the gold stock starting to lead the gold price, the gold stocks have started their bull run up into their eventual bubble, or they're slightly overvalued or even a lot overvalued. We're nowhere near that. This signals that we're in the bottoming out period of the stocks, and eventually it's going to recover and go up. It's very clear when you look at the long-term chart. So wanted to show you those patterns very, very clearly for you guys so that you understand them. I'm actually going to save this chart. And okay, we got it saved already. And we'll continue to come back and compare gold to the gold stocks. Again, gold stocks, tremendous opportunities. So what are we going to talk about today? One of the gold stocks I want to talk about today for you guys, since you asked me so much, is Silver Tiger Metals. Now, those of you who follow my channel know that we had a really nice interview with Glenn Jessam back, I want to say about 6 weeks ago or 2 months ago. It got about 15,000 views. It's a very popular video on my channel because Glenn is great at talking about his company, because the company is a very good prospect. Now, if you want to trade it, it's SLVR in Canada or SLVTF here in the United States. Those are its tickers right here at the top of the webpage. And I'm going to go over first their management team. This team has 25 years experience of delivering successful projects without a big failure. It's led by Glenn Jessam, President and CEO. He has 25 years of experience in the resource sector in the capital market, so he's on the business side. Serves as a member of the TSXV, Toronto Stock Exchange Venture, that's the stock exchange, National Advisory Committee. He's a corporate secretary and a founding shareholder of GoGo Resources, another company we talked about, which is a producing gold miner, which is doing very, very well. And he has a law degree and MBA from Dalhousie University in Halifax, Nova Scotia. Very smart guy. Then we have Glenn Holmes. He's the chief financial officer, 30 years of experience in the industry. Has worked for Silver Tiger Metals, chief financial officer for Estrican Resources, which is now Endeavor Mining. Many of you recognize that. That's a big name with the Yuga gold mine in Burkina Faso. So a lot of experience, big company, serially successful management team. Dave Duncan is the geologist, more than 40 years of experience, worked on Algoma Ore, Kidd Creek Mines, Falcon Bridge, WMC, and Endeavor Mining. Also, recent years worked on Go Gold Resources, Santa Gertrudis. He's a registered professional geoscientist. So a very experienced and very successful management team, and it all starts with management, and this is a very good team, and they have a good project. Let's go over their share information real quick. Again, TSXV, Toronto Stock Exchange Venture, SLVR, on the OTCQX here in the US, SLVTF. And when you're on the QX or the QB, you have a lot of volume on the OTC. So it's not the pink or the gray sheets. You have good solid volume. It is an established market where you can trade those shares. And so that's good that they're listed there. They have 259 million shares outstanding, fully diluted 301 million by management director, 14.6%. Looking at their stock price dating back to July of last year, they've traded in a range of 45 to 75 cents. This is a definite range here, although you have an uptrend. You go here, this is an uptrend, and this is an uptrend. So that's a bull flag pattern in the price, even though we have a temporary pullback. Overall bull flag pattern over the last, I want to say, year and about 2 or 3 months, dating back to April of last year. So overall, pretty good on the stock. The basic share information will provide you some more information. I wanted to provide you the analyst reports. They're followed by 5 analysts. 3 of them have provided public recommendations. Here in the Wall Street Journal, you can see 3 of them. They're all buy. They expect the price of Silver Tiger to go up. These are professional analysts that work for major bank and major financial institutions that look into all of the financial details, the physical details, the project. They visit the site, do things, interact with management, compare to other miners in the area. They do all of that background work, all of that heavy duty work to make their analyst recommendations, and they're all 3 a buy on Silver Tiger. All 3 a buy on Silver Tiger. The price targets range from $1.30 to $1.40, average of $1.33. And right now the share price is about 40 cents US. So they're undervalued by a factor of about 3 compared to where the analysts think they could be based upon the minerals that they have identified so far in their exploration program and their proposed project. One of the reasons for that, and something that Glenn told me when we did that previous video on our channel, was they have great veins and high grade sample results, okay, on those veins, and it's a previously producing district. It was previously producing until there were economic issues in Mexico and the price of silver really dropped. And so it's been a while since they've mined it, but it's a previously producing mine. It has a 43-101 technical report. We'll go over that in a minute. And that's why people are so high on that. And that's why you have these 3 analysts saying, oh, it should be $1.40. I mean, it's completely undervalued. Now go back to the HUI and the GDX. A lot of these stocks are undervalued. But I would say this company, Silver Tiger, is probably more undervalued than it should be when you're looking at these. Now, this is a gold chart, but if you look at the silver indices, it's about the same thing. The precious metals the stocks are undervalued compared to the overall metals. And you'll see that both in gold and silver. And that's why you see the upside of this stock currently, I mean, you know, even before they continue to outline additional resource. So here's the El Tigre Historic Mine District where they are, an overview. The El Tigre Historic Mine District is located in Sonora, Mexico. That is a great district to mine in. We spent a lot of time looking at companies in Sonora. It lies at the northern end of the Sierra Madre Silver and Gold Belt, which hosts many epithermal silver and gold deposits, including Dolores, Santa Elena, and Las Chispas. Okay, Las Chispas is Silvercrest. Many of you have heard me write about them dating back 3.5 years to early 2018, when I visited the mine in early 2018 and starting writing stories about Las Chispas. And in fact, in the video I did with Glenn a while back on our channel, we talked about Las Chispas and how Silver Tiger has very similar fundamentals and is on the overall same type of vein system as Silvercrest is, and I think should have the same or better overall results as what we see in Silvercrest. Silvercrest is now building their mine, very successful company. Silver Tiger looks like an analog to that, just earlier stage. So again, if you want to get in and have upside value to a stock, you look at those type of characteristics, geological, management, mining district, stuff like that, as other successful companies like Silver Tiger is to Las Chispas, the Babicanora vein at Silvercrest. So again, this is analogous maybe to an earlier version of Silvercrest. A lot of people are happy with Silvercrest when they got in very early. In 1896, gold was first discovered at Gold Hill, and it soon high-grade silver veins were found. Overall, I believe there were 353 ounces of gold mined at 67.4 million ounces of silver, over 1.87 million tons at El Tigre mine. And so there is the metal there. Again, it was stopped when silver dropped down to 20 cents because of issues in the Mexican economy, and I believe the war. By the time the mine closed in 1930, it reported to have produced this. Mining, here it is. It was the Great Depression. So mining stopped when all three of these veins and the price dropped to less than 20 cents an ounce. Now, silver is more than economic enough at current prices for them to mine it here. So it's not an issue where silver is underpriced where they can't make money. They just need to continue to explore the earlier stage. They're not ready to build their mine just quite yet. So here's more information if you want on their website. Here's the plan map. So this is just an overview of the area we're talking about. Here are the veins and some of the findings in the veins: 0.5 meter, 1592 silver equivalent, 0.5 meter, 2049 silver equivalent, 7.3 meter, 221.2 silver equivalent. Some people have said some of their veins are relatively thin, but they're high silver. Well, those are just parts of the veins that tend to be very high silver equivalent, but you can see they've got a 10 meter here, 11.8 meter, 7.3 meter. So a lot of their drill results are showing deeper and wider veins in which they can mine from. 1.5 meter, 14.8 meter, 9.3 meter, 22.2 meter, 1.3 meter, 10.8 meter at 368.6 grams per ton. So they have plenty of good drill results to indicate not only do they have wide enough veins, but that they have really good amounts of silver. So again, this looks a lot like, to me, when I was visiting Silvercrest back in 2018, you're getting the same type of results. Now, they haven't found their Babicanora stretch of vein just yet, but they've got a lot to explore here. And I believe that they're going to continue to find good results. And I think they're going to be just fine. Here's some significant drill results, tons of different drill result findings here. I'll let you guys go through that. Here's one drill hole, ET 1444, 31.5 meters of 2,748 grams per ton silver, consisting of 1,990.9 grams per ton silver and 10.1 grams per ton gold. That's amazing, including about a meter, about 0.85 meters of 10,128.9 grams per ton silver and 38.9 grams per ton silver and 3.7 grams per ton gold. And the Calais vein. All right, so here's a soy vein. They've released news results recently on the soy vein. I reported that on the program. So lots of good drill results, and they're not all thin vein. There's a lot of big meaty veins in there that you can look at in the drill results. They do have the 43101 report. It has indicated resource of 661,000 gold equivalent ounces, inferred of 341,000 gold equivalent ounces. And they also have a lot of silver in here as well. Let's look at it. Total indicated and inferred. You have silver ounces indicated 18,026,000 ounces with another additional inferred at 18.9. So that's about 37 million ounces of silver. And it looks like you have about 550,000 ounces of gold as well. That's really good. And they're continuing their exploration program. So they're going to find more, but good veins, good finds, great district near Silvercrest. I've seen this type of deposit before in Silvercrest. Again, I wrote on Silvercrest when they were trading $1.40 a share back when they really hadn't hit the big finds at Babicanora. They literally had just started looking at Babicanora. And it's when they had Las Chispas, the William Tell vein, they hadn't really hit big on Babicanora yet. They hit on Babicanora and the rest is history. All of their veins are good, but Babicanora is really good. I think that's where Silver Tiger is. We're getting Silver Tiger before they've hit the Babicanora vein, although they have hit some pretty damn good results so far on what they found, and they've got additional exploration. And again, same profile as what we saw in Silvercrest. Will they be another Silvercrest? We'll have to wait and see, but early on, they're an analog to what we saw at Silvercrest and Las Chispas. Also wanted to look at their Verify. This is sort of an aerial shot at their proposed mining pit in the vein where they're getting their results. And we're going to fast forward here to looking at the underside of it. You can see how deep that goes. Most of this is going to be surface pit. There's probably going to be some resource down here. This is the indicated here, and this is the inferred from the drill results. So a lot of resource here, some at surface and some at depth. And if you look at if you go further into their verified deck, you've got the estimated ounces as well. And they tell you where the indicated ones right here. These are indicated grams per ton and total ounces, 18 million ounces silver indicated, and gold 661,000 ounces in this and in this. And in the blue area, it's 18,974 million ounces silver, 341,000 ounces equivalent gold here in the blue. So that's El Tigre. That is Silver Tiger. I think it's a great early stage project for you guys to consider because you like mining stocks. I brought that to you. And again, wanted to reiterate that the mining stocks are undervalued when compared with the overall precious metals prices. And this pattern is going to reverse. This is going to reverse, and these are going to shoot to the upside above the price of gold and of silver. If we look silver chart, similar thing. They're going to shoot above when they start to recover. So this is the time that you want to consider getting into mining shares is when they're undervalued. Now, a lot of people, the way that they invest is buy high, sell low. In other words, they get into it as the thing has already, everybody knows about it. The cab driver's talking about it. CNBC's talking about it. Jim Cramer's shouting about it on his program. That's when people get into certain stocks or into certain investments like resources. By then, you've already had the buildup. The mining stocks right now, the precious metal stocks right now are at a bottom. I mean, they're a little bit higher than they were a couple of years ago, but they're still in that bottom range. And they have not even recovered compared to what the precious metals have. And we know that we're in a bull market for the precious metal. When we look at long-term charts and the macroeconomic factors, I've covered that literally hundreds of times on this channel, showed you charts, all of that good stuff. So where I think we are is that comparatively speaking, the mining stocks are a better potential longer-term value than the metals themselves. Now, I primarily myself invest in the metals first and then the mining stocks as a speculation, because not all the mining stocks do well all the time. But as a whole, when you look at like the GDX and HUI, you can tell they're going to shoot to the upside when the metals rise again, and they're going to shoot farther. They're going to overshoot because they're undervalued, relatively speaking. That's the pattern we've seen in history. And if you're a buy low and sell high to actually make money on these, you might consider getting into it now. And Silver Tiger is definitely one of those examples of an undervalued asset. Remember, the analysts, the 3 professional analysts that work for the banks and financial institutions that do this for a living, think that it's trading at about a third of what it should be trading right now. Value investment. This is a Warren Buffett type investment in the resource stocks. Look for value, look for good fundamentals of that company, okay, and look at where they're undervalued in a bull market where there's going to be upside. So you're not fighting the overall macroeconomic trend or the overall market trend. You're not fighting that trend. You're getting into the beginning of that trend, and you're going to ride that trend up, and you're going to have that upside. So that's my recommendation for you today, guys. Now, I'm not a financial advisor. I'm not licensed to sell this stuff. I can't sell you any of it. You need to contact your financial advisor or do your own research before you make an investment. But this is my view on the overall mining stocks in gold and silver when compared to the actual metals, and on Silver Tiger in general. Undervalued, good project, good management, good zone, good drill results, good everything, technical report, everything that you want to check the box on an early stage development that's going to grow. And again, I see analogs to what I saw and correctly identified in 2018 in Silvercrest Las Chispas, which is not far. It's in the overall same geologic profile as Silver Tiger is. I saw this back in 2018, correctly called it, and look at what's happened to Silvercrest. So we'll see if that happens to Silver Tiger as well, but I think the potential is there. And that's why I think this is maybe a potentially good investment for you guys that invest in the stocks. Now, if you don't invest in the stocks, just stay in the metals is okay. You can buy the metal after Silver Tiger gets it out of the ground, after these companies get it in the ground. I think you're going to be okay too. All right, this is going to wrap up the video. Thanks, guys. Until next time, this is Rob Kienzle, Gold Silver Pro.